Okay guys, so in this video we are going to cover how to use point perfect take profit placement using the symmetrical swing of the retracement. Okay, so in this instance we are going to cover this right here. Now the places that you will be using this symmetrical swing usually occurs when price is ranging, bullish or bearish, for a prolonged amount of time. So what I mean by that is that you only want to use this when you have heavy ranging in the markets. When it's ranging. Okay, so the definition of using the symmetrical swing as your take profit means that you take the retracement range and project it below in a bearish instance, of course, and that is your take profit right there. That is your take profit. And your entry, in this case we have a turtle soup entry, which means it is just a liquidity grab to run lower. So here we have buy side liquidity, price comes up, retraces back down, and this creates buy side liquidity. It just means where retail traders enter a buy position. I know it sounds crazy, but they do that. So we not only have buy side liquidity grab happening, but we also have a fair value gap just about here. There you go. Fair value gap right there. So you for sure have liquidity to run lower, which is our target, which is our initial target, because we are bearish in this market. So one thing I want to note, you guys, is when we are looking for our entry, we are not looking for a retracement and looking at that as, oh, I might want to get in right now, because it may just retrace up to here or up to here, or it may just do this candle and continue back down. The reason that you want to apply these ICT concepts is because you can actually predict where price will stop and start to continue the trend and put an end to the retracement. Okay. In this instance, since we have a higher low created, which means that that high has buy side liquidity, we are seeing that as our setup for a liquidity grab. It just means a turtle soup setup, because that is based on liquidity grabs, and when liquidity grabs happen, that is your entry. Okay, so let's put some lipstick on it for you to actually see what I'm talking about. So boom, liquidity grab, tap into fair value gap, stop loss would be right above this fractal, and after fair value, stop loss would be after the fair value gap, and finally your take profit will be at the symmetrical swing low. As you can see, guys, it works out pinpoint perfectly, as you can see. So again, what is a symmetrical swing? It is taking the range of the retracement and projecting it down below, and which we use as our take profit. So usually how it happens, is that this low would be your first take profit, this would be your second take profit, and the 200% symmetrical swing, which is just the symmetrical swing but twice the size. As you can see, guys, this is what I mean. So it is twice, meaning that this will be 100% of that range, and this will be 200% of this range. So this is double of this range, and this is your third take profit. You can see. So boom, and price goes back up. And you can see, guys, even at the first symmetrical swing low, it immediately goes into a consolidation, which in this case is just a accumulation of buy and sell orders, which just reflects how much power this holds in itself. And then we break down for our double symmetrical swing right there. Pinpoint take profits with this strategy. Okay, guys, so let's look at another example. So right here we have a bearish range, a strong bearish range again, and a retracement. Now this time it's not the fair value gap that we are looking for a entry of, neither it is a turtle soup pattern or a liquidity grab, but it is a order block, which is right just about here. As you can see, guys, this order block could not be any more obvious for you to see. So as soon as this order block gets formed by price, you are looking for a retracement back up to it, which is your entry, which would be right here. Your take profit, as I said, in a ranging, would be the symmetrical swing low. So let's just draw it out for you guys to see what we are actually talking about. And by the way, what I forgot to tell you guys is that when you are measuring the range, for you to project it below, you only want to measure the bodies, the candles, not the wicks, okay? And again, put it at the body. Okay, so let's draw it out. Let's draw out the trade that you would have right here. So your entry would be as soon as it enters the order block, which is here. Your stop loss will be above the order block. Your take profit will be at the swing. Your take profit will be at the symmetrical swing low. And one more thing that you could also note is when another retracement happens, you want to measure with that. You want to measure the symmetrical swing with that range, with that retracement, which in this case is this, because we have a high broken into a order block. As I told you guys, again, take profit will be the symmetrical swing, which I'm about to draw out right here. So up to the high, with the bodies only, not the candles, or sorry, not the wicks. Put it at the body. Boom. See? So let's draw out another entry. As you can see, guys, it happened one after another. So entry at the order block, stop loss above the order block, take profit at the symmetrical swing low, which also worked out pinpoint perfectly. So it's the exact same trade, exactly the same trade. So order block here and your take profit at the symmetrical swing low and your stop loss above the order block. See guys, it happened exactly one after another. I mean you guys cannot say, but like Kiseikos, this only works because you rolled back the charts and was trying to find pinpoint perfect entries and trades matching your concepts. I'm sorry, not my concepts, by matching ICT's concepts. No, as you can see guys, it happened one after another. Okay, that's it. That's all you need. So this is another type of entry that you could be taking every time, every day. This forms multiple times a day. So you could also combine this with time and price theory. Okay, so what does time and price theory says? It says that your setup will either be at 8:30 or at 9:30. In this case we have it at 9:30 because we have a order block formed, and when it forms, as I told you guys, we are anticipating price coming back up to that order block, which we anticipate as our entry. So that is what a setup means. A setup in the forming. A setup forming means, because it is not over or down yet. And one more thing that you guys could note is that in case of news events, which of course you don't want to be trading, but in the case that you are trading, you could use not the 200%, meaning the double symmetrical swing retracement range, but you could use the 300 or 400% of that symmetrical swing range, because the same thing applies, but since it is just a higher level of liquidity, you want to take that into account and maximize your take profits with this strategy. Okay guys, I hope it was insightful. See you in the next video. Peace.